Ever get that feeling? Like you're drowning in economic headlines, investment tips, and none of it really makes sense anymore. Like the old rules are kind of being ripped up right in front of us. That's kind of how we were feeling before we dove into this really fascinating conversation?
Yeah, it's definitely a lot to process out there these days. We've been spending some time unpacking this discussion between Michael Saylor, the MicroStrategy CEO, huge Bitcoin guy, and BlockTrainer. It's from back in August 14th, 2024, to be exact.
Yeah, and just to give some context for anyone who might not know, Michael Saylor,
Yeah.
he's not just talking the talk. I mean, his company MicroStrategy has put their money where their mouth is, right? Big time. By December 2024, they were holding something like 446,400 Bitcoin. So we're trying to do this for you today. Dig into how he sees Bitcoin impacting things, economics, investing, global finance, the whole nine yards. We really went through their entire conversation to pull out the most insightful bits, the stuff that really gets you thinking?
And honestly, it was a pretty wide-ranging conversation. Evolution of economics, the limitations of traditional investment theories, digital capital, this whole concept of the physics of money, Saylor's macro forecasts, the potential impact of Bitcoin on the world. It was a lot, but super interesting. Definitely worth a deep dive.
Okay, so let's unpack this, right? Let's start with economics itself. Saylor has this whole perspective on how digital tech, Bitcoin specifically, is pushing economics towards becoming a more hardcore science almost. What did you find most interesting about that argument?
Well, what really stands out is his point that economics, historically,
Yeah.
it's been very qualitative, right? Lots of observation of human behavior, central banks intervening. There's a lot of variability, I guess. But Bitcoin, it's got that fixed supply, 21 million coins, and the halving events are predictable. It's all in the code. So that introduces a whole new level of transparency and immutability. You get this super clean data set that economists can actually analyze with a lot more certainty about how the underlying system works.
Yeah, makes sense. Because with traditional currencies, you're always dealing with the possibility of inflation, changes in monetary policy, and that really messes things up when you're trying to create solid models. But Bitcoin,
Yeah.
the scarcity is built in, right? It can't be
Yeah,
changed.
exactly. And Saylor sees this as a huge step towards being able to build more precise models of how economic activity works within this fixed system. Imagine an economic system where the rules aren't being tinkered with by politicians or central bankers. The rules are just in the code.
It's almost like a controlled environment for studying economics, right? Like a laboratory.
Yeah, that's a great way to put it. He's basically saying Bitcoin gives you this controlled environment where you can actually test economic theories, maybe even discover new economic principles because the system itself is immune to human meddling. And we're already seeing more and more research using Bitcoin data to test hypotheses. Things like exchange rate dynamics, even using machine learning and AI to predict Bitcoin prices within economic models. It's all pointing to this evolution he's talking about.
That's fascinating. So if economics is becoming more scientific in this digital age, how does that affect how we think about investing? Because Saylor also had some pretty strong opinions about traditional investment theory, especially the whole idea of diversification.
Oh yeah, he definitely challenges some of those well-established ideas.
Hmm.
His main argument against going overboard with diversification is, well, it's often presented as the golden rule of managing risk, right?
Mm.
Don't put all your eggs in one basket. But it can also really limit your potential gains, especially if you believe in an asset like Bitcoin that has the potential for huge upside, asymmetric upside, he calls it.
And MicroStrategy's massive Bitcoin holdings are definitely a testament to that philosophy, right? Holding that much Bitcoin,
Yeah.
over 446,000 by the end of 24. It's pretty much the opposite of diversification. And you can't deny that their stock has basically been a Bitcoin proxy. When Bitcoin goes up, MicroStrategy goes up.
Yeah, for sure. His view is basically if you really believe in the transformative potential of an asset like Bitcoin, if you've done your research and you're convinced about the risk reward, then spreading your capital too thinly across tons of other assets could actually hold you back from reaching your goals. He's a big believer in concentrated bets on, high conviction
That's
assets.
interesting. And what about that whole efficient market hypothesis? The idea that prices already reflect all available information? Sailors seem pretty skeptical about that, especially when it comes to Bitcoin.
Oh yeah, he definitely pushed back on that. His argument is that there's still so much misunderstanding about Bitcoin, even among professional investors, institutions. There's just a lack of complete information. That lack of understanding, that's what creates inefficiencies in the market. It gives an advantage to the people who took the time to really understand the fundamentals, the early adopters, the ones who did their homework. He doesn't think the market has truly grasped the long-term implications of Bitcoin, and that's why he sees those inefficiencies.
Right. So not everyone agrees that the Bitcoin market is inefficient. But Saylor's point about the lack of understanding causing those inefficiencies, it's pretty compelling, I gotta admit.
Yeah.
Now, he often uses the analogy of Bitcoin as digital gold. What's the thinking behind that?
It's kind of the foundation of his investment thesis.
Mm.
He's saying Bitcoin has a lot of the same things that have made gold such a reliable store of value throughout history, right? The scarcity, the durability. But Bitcoin has these crucial advantages too. It's way easier to divide and transfer in the digital age, which is huge. And when you consider the size of the gold market, it's something like $12 trillion, right?
Right.
And then real estate, even bigger, like 300 trillion. Saylor sees a ton of potential for Bitcoin to kind of absorb value from those traditional asset classes as understanding and adoption grow.
That'd be a massive shift of capital, which kind of brings us to his whole concept of Bitcoin as digital capital. It's not just about the price going up, right? It's more fundamental. Exactly.
Talking about Bitcoin being a totally new form of capital that isn't limited by physical constraints, like land or gold.
Yeah.
You know, think about it. In the internet age, data and networks are some of the most valuable forms of capital, right? And they're digital. Bitcoin fits right into that, right? Decentralized, secure, borderless store of value. He even calls it a bank in cyberspace sometimes, which is a pretty good way to put it. It's like this foundational financial infrastructure, but it only exists in the digital realm.
And that digital borderless nature, it has big implications for financial inclusion, right? For people all over the world.
Oh, yeah, absolutely. Think about the 1.4 billion people globally who are unbanked. Traditional banking systems. They often can't reach these people. Geographic barriers, high fees, all that bureaucracy. Bitcoin. It's accessible to anyone with a smartphone and an internet connection. It's like a global savings account, you know. It's resistant to censorship, and you don't need permission from anyone to use it. And then you have the blockchain technology behind it all, which can make all kinds of financial processes more efficient, cheaper, faster. Think about international money transfers, settling transactions. It's pretty amazing to think that this digital code could be a solution for over 1 billion people who are shut out of traditional finance. It's a really powerful idea.
Yeah, it's like taking all the good stuff about sound money and rebuilding it from the ground up for the digital age. Now, you mentioned the physics of money earlier. It's a pretty unique concept. What's that all about?
This is where Saylor's perspective gets really interesting, I think. He's comparing money to energy, right? Saying that money, just like energy, has to be conserved, moved around efficiently, stored properly, or it loses its value. He says that fiat currencies, because of inflation, they're like systems with leaks, you know? Their value erodes over time. But Bitcoin, with that fixed supply, it's like a form of energy conservation. He even calls it a digital battery for storing economic energy without losing it.
So that fixed supply, that scarcity that's driven by the halving events, that's the heart of his physics of money analogy.
Exactly. He's saying that Bitcoin's fixed supply. It's like a fundamental law of physics. Unchangeable, predictable, like gravity or the laws of thermodynamics. And it's not just a metaphor either. Some people argue that Bitcoin's design, especially the proof of work system it uses, that it actually aligns with real principles of thermodynamics, which makes it incredibly difficult and expensive to mess with the network or change its history. It's practically indestructible, digitally speaking, this alignment with natural laws. It might even explain why Bitcoin's adoption has followed that S-curve pattern, kind of like how electricity or the internet spread through society, you know?
It's a really interesting way to think about money. Like, it's governed by the same forces that govern the universe. Makes you think about its long-term potential, its stability. Speaking of long-term, Saylor has a pretty bold 21-year macro prediction for Bitcoin, doesn't he?
He does, yeah. He thinks Bitcoin will be the dominant monetary network by 2045. He's predicting a price between $3 and $6 million per Bitcoin. That's a big number, for sure. His reasoning is based on how transformative technologies get adopted. They often follow this S-curve pattern, right? He thinks Bitcoin's going to capture a good chunk, like maybe 10 to 20% of global wealth, which he estimates at around $900 trillion.
And I'm guessing those halving cycles, the way they keep reducing the supply of Bitcoin, that's a big factor in his prediction, right?
Definitely. Those halving events, they systematically cut the rate at which new Bitcoin is created, right? So the supply growth slows down. Historically, when those halvings have happened, you've seen big price jumps. It's that whole supply and demand thing playing out. And he also points to more and more companies adopting Bitcoin. MicroStrategy is a big example, right? Showing how companies can use Bitcoin as part of their treasury strategy. It's important to remember, though, that Saylor's not the only one who's bullish long-term. Even some of the earliest Bitcoin people, like Hal Finney, years ago, they were talking about Bitcoin potentially being worth tens of millions someday. And a lot of the models out there now, they predict Bitcoin reaching millions per coin within the 2040 to 2050 timeframe. The key thing is, by 2045, almost no new Bitcoin will be created. It becomes a truly deflationary asset. And that has massive implications for how we think about saving, investing, doing business. Everything changes when the incentives around spending versus holding shift like that.
So, zooming out a bit, beyond the potential profits for investors, how does Saylor see Bitcoin making the world a better place?
He talks about several key areas. We talked about financial inclusion for the unbanked, right? Giving them a way to save money securely, transact, basically participate in the global economy when traditional finance has left them out. He also talks about wealth preservation, especially in countries struggling with hyperinflation. Places like Venezuela, Zimbabwe, we've seen people in those places turning to Bitcoin as a safer alternative when their local currency is collapsing.
Yeah, we've seen that happening in Zimbabwe, especially with all the volatility in their currency. It's not just theoretical anymore, it's real.
Exactly. He also thinks Bitcoin could make the whole economy more efficient, by cutting out the middlemen in financial transactions. That could lead to lower fees and faster global trade, which would be huge. And maybe most importantly, he sees that decentralization, that censorship resistance. He sees that as a way to empower people who live under oppressive governments. It gives them a way to protect their wealth, to participate in the global economy, all outside the control of their government. Ultimately, Saylor's whole vision for Bitcoin, it goes back to that physics framework we talked about. He's aiming for a global system that's more efficient, more fair, more stable, a system that minimizes the waste and friction we see in the systems we have now.
So tying it all together, it sounds like Saylor believes Bitcoin is way more than just an investment or some new tech gadget. He sees it as a fundamental building block for a whole new way of thinking about economics and finance. It's not just about making money, it's about changing the world.
Yeah, that's a good way to put it. He's saying Bitcoin could be the thing that makes economics a real science, that forces us to rethink all our old assumptions about finance. It's a bet on digital scarcity and the potential for a fairer, more efficient global economy. It's a pretty big vision.
It really is. And it makes you wonder, thinking about that whole physics of money thing, what would happen if a digital currency with a truly fixed supply, like Bitcoin, what would happen if it really did become the dominant form of money? How would that change our understanding of economic cycles, of financial stability in the long run? It's a big question, one worth thinking about. This whole space is changing so fast, and we hope these deep dives give you a good way to make sense of it all.